Hi, I'm Hannah Wallace and welcome to FinextraTV. Kindly calling into our virtual studio today to talk about how technology and innovation can bridge the trade finance gap is Sudhir Dole, CEO of Trade Information Network, and Rajasekar Sukumar, Vice President, Europe at Persistent Systems. So gentlemen, thank you very much for calling in. It's good to have you on.
Thank you for inviting us.
Thanks for having us.
No problem at all. So this is a really interesting topic, as today we see banks increasingly looking to mitigate the risks associated with trade finance, fraud risk, double financing and the like. So what's needed then is a secure platform that offers an information registry for the safe exchange of data, which would help address many of these risks. So with that in mind, where does Trade Information Network come in? Sudhir, can you kick things off by giving us a short introduction?
Thank you, Anna. And like you very correctly said, we are an information registry. Very simply put, we allow buyers and suppliers to exchange trade data with each other in a very secure and safe way, and also with their bankers. We were founded by 6 global banks: ANZ, BNP, Citi, Deutsche, HSBC, and Standard Chartered. Now, these 6 banks got together to create this platform for the entire financial industry, as well as their customers. And the idea of the platform is that we believe that through the platform, we can mitigate the risks associated with trade finance, thereby enabling banks to finance the entire working capital cycle, starting from the pre-shipment stage of financing. This would really help us in plugging the trade finance gap. We also believe very strongly that the opportunity is huge as a revenue opportunity for banks. And with the reduction in risk, it becomes a very interesting risk return metrics to look at. Our platform is already live. We have had transactions commencing on the platform, and we have a very healthy pipeline. So at a very interesting stage at this point in our life cycle.
Brilliant. Well, homing in on the trade finance gap then, a lot of fintechs seem to be trying to solve this problem, right? So what makes you stand out?
That's a great question, Hannah, and it's a very fair question. So I would say there are 3 reasons, starting with, firstly, our shareholders. They are amongst the biggest banks in trade finance. So we believe having these banks supporting us on the platform, and as they bring their transactions on the platform, we'll be able to scale up faster and thereby help bridge the trade finance gap. The second big item I would say is to do with the fact that our platform is not a private equity play. It's a utility play built by the industry for the industry. And therefore, the kind of pricing that we'll offer on the platform is very reasonable. We want to make sure that the platform is very inclusive and we have as many banks on the platform as possible. Not only that, for the corporates, we are not charging anything. So it's free for the corporates to come on the platform. So by making such an inclusive platform, we are removing the entry barriers and making it very easy for people to join the platform. And third point, which is equally important, is the fact that we address the risks. So if you look at the trade finance gap, we need to really probe as to why the trade finance gap has been such a difficult problem to solve. And it's because of the risks associated with this whole issue of the trade finance gap and the trade finance industry. And by probing into that issue and really solving the fundamental risks, we make the risk return metrics very interesting. And therefore, our platform, we believe, is very scalable.
All right, that's interesting. It's good to get a history and a sort of backstory around the issue there. So can you tell me what are the major risks then that the Trade Information Network platform helps to mitigate? What about that?
I would say there are 3 risks fundamentally. The first being fraud risk. The second being double finance risk, and the third risk which we look to address is performance risk of the supplier. So let me start with fraud risk with a very simple example. Typically, what happens in banking is that a supplier would go to his banker and produce a purchase order which he has got from the buyer and say, I want financing against that. Now, the banker is not sure whether this purchase order is genuine. On our platform, we address that issue because on our platform, the data on the purchase order comes from the original source, which is actually the buyer, because they are on the platform, and typically it would come from the ERP platform of the buyer onto the platform. And therefore, the banker is in a much better position to assess the risk, and that gives him a lot of comfort. The second risk is double financing risk. So our platform has a number of features to reduce the double financing risk. For example, once an invoice or a purchase order is financed on the platform, it cannot be financed again on the platform. But also important to note is that because of the nature of our shareholders and the fact that our platform will scale up quicker, it means that the platform will be used by the industry much more actively. And therefore, you'll see the network effect coming in and the risk of double financing reducing. Also, our shareholders and the other banks will collaborate with other banks. So our platform is a collaborative workspace where banks all over the world, emerging markets, larger banks, medium-sized banks, all can work together to add value to each other and also to the ecosystem. And finally, let me talk about performance risk. So today where data has become so important, our platform has the capacity to host a lot of data. We host data about purchase orders, invoices, shipment data, goods received data. So this data is going to be on our platform and the banker can mine this data to analyze the risk. So let me give you a simple example here again. The data can be stored as to what is the actual shipment date and what is the expected shipment date by the supplier. So the bank can look at the variance analysis of that and figure out whether the supplier is repeatedly delaying shipments or not. Similarly, he can look at the credit notes raised by the buyer and figure out are there quality issues in terms of the goods being supplied by the supplier. So this enables a bank to build an early warning real-time system to manage risks of the supplier, which is becoming even more relevant when you look at SMEs, because in SMEs, you typically get the financial statements very late, and then you are not sure as a banker about the quality of the statements. But by having this real-time live data, which he can monitor as a banker, you can build an early warning system. So essentially, these are the three risks: fraud risk, double financing risk, and performance risk to the supplier. And we believe by examining these risks and handling them much better, banks will be in a much better position to grow their business and also reduce the risk at the same time.
Well, it sounds like an incredibly efficient platform then, and it sounds like you're very hard at work there. So Raj, coming to you then, let's talk about partnerships. How important are these partnerships, such as your own with Trade Information Network, in delivering such disruptive change then? Where do you come in?
Good question, Hannah, and quite relevant to the current context as well that Sudhir just mentioned. So businesses like Trade Information Network are really at the forefront of driving disruptive change, like you mentioned. In this pursuit of change, it's very important to keep focus on the core objectives and business processes and look for help from partners like us to help them enable those ingredients that is needed for the business. Because it's very easy to get caught up in the complexities of setting up this business grounds up. And this distracts the management significantly. The way we see it, primarily, there are two complexities. One is the complexity of choice. Businesses these days have access to a number of technologies, cloud platforms, tools, processes, products that they can leverage to drive the business outcomes that they want. Choosing the right ones is extremely critical so that they can get the right business agility in place and the scale for the long term. The second complexity is the complexity of integration. Now, once you made the decision, you need to bring all of them together to one unified operating model. Once you've taken the decision around tools, technologies, and processes, that goes a long way in defining how the business is going to scale in the future. So this is where partnerships really come to the foray. So I believe it's extremely important to forge the right partnerships so that the businesses, for example, like Trade Information Network, can remain focused to their core objectives, but at the same time drive the right impact for their end users.
All right, so you've highlighted the importance of partnerships such as your own, and a really positive one there as well. So how do you see Persistent helping Trade Information Network to achieve its objectives? What about that?
Yeah, we very quickly understood through our engagement with Sudhir and team that the biggest challenge in supply chain today is the onboarding of buyers and suppliers. I think he mentioned that earlier as well. And it is a critical step to facilitate efficient trade finance. Not just only that, but also to increase the adoption of the platform itself, which is very, very important for Trade Information Network. So there is a clear need to make this experience seamless. this has been our singular focus right from the get-go, to be honest. And we believe, I think this is where we can collaborate with a trade information network and set up and run efficient operations for things like KYC and user onboarding through setting up the right models in place, helping them choose the right tools and technologies, setting up the right operating model, forging additional partnerships that we may need, and also defining the right metrics that the business should work towards so that the experience is seamless throughout. So, with Persistent, we work with a lot of global enterprises, but we also have a good track record of working with a number of new age and modern brands and startups, such as Trade Information Network or Fintechs or challenger banks, etc. To an extent, we consider ourselves as a challenger brand. And so we intricately understand the dynamics that are involved and understand the complexities that are involved. And we believe we have the solutions and accelerators and also the right partner ecosystem. You need to bring them together as well to be able to help them achieve these outcomes and also support them in their next phase of growth.
Well, thank you, Raj. And as I said, a really positive partnership there and some really interesting developments further down the line. But we'll leave it there. Thank you very much for calling in and sharing your insights.
Thanks for having us.
Thank you very much for having us.